Good morning, everybody. Good to see you all. I can see we have quite a number of people that have logged in. Karibuni, karibuni. Because I'm seeing lots of logging in still going on, I want to give us just 2 minutes or so. Grab a cup of tea, grab a glass of water. I think this will be a very exciting session you won't want to miss when we begin. So just 2 more minutes, we get everyone to settle down and we start off. Karibuni. All right, I can see, good, the numbers are still going on. We may not be able to wait for everyone, but I just want to take this opportunity to invite you all to this webinar. And to start us off, I'll call upon Madam Mercy Mnyolmo to just open for us with a word of prayer. Mercy, are you in the house?
Hi, everyone.
Hi, Mercy.
Okay, let's believe and pray. Ancient of Days, we just want to thank you for this day and this opportunity to host this webinar, King of Glory. I'm just praying for your guidance, your knowledge, spiritual wisdom, and understanding throughout the session. May you be with us from the beginning till the end. In Jesus' name, I do pray and believe. Amen.
Amen. Amen. Amen. Thank you, Mercy. So once again, I take this opportunity to welcome us all for this session, this very, very interesting webinar. What caught my attention on this webinar was the regular passive income. And I'm sure all of us would not mind some regular passive income. So on board today, we have very, very interesting people on board who have quite some experience in terms of REITs, in terms of experience, hands-on experience in understanding what REITs are. And I believe that after this session, we will be better equipped to utilize REITs to earn some regular passive income. So karibuni sana, I can see my panelists are all here. They're all in the house. And I have Timothy Wamboi. Timothy, maybe you could just wave before I do your introduction. I have Hilda. Hilda, you could wave at the people. And then I have Shafana, Madam Shafana Rajani. Hi, Shafana, karibuni sana. Just to give you a brief of the kind of people we have on board, to give you confidence that for sure after this session, you'll be better equipped. I'll start with Hilda Njoroge. Hilda is a property investment manager at Corp Trust Investment Services. She has over 8 years experience in investment management with a focus on asset management, real estate development, and investment analysis. Hilda is the head of the property business at Corp Trust Investment Services Limited, a wholly owned subsidiary of Cooperative Bank of Kenya. She's responsible for actively leading engagement with clients in their property investment and development activities. Prior to joining, Hilda worked at Stanley Kenya Limited, where she was a core team member. She was a core team member of the team responsible for the launch and successful listing of the Kenya's first income real estate investment dubbed Fahari REITs. That was in November 2015. Hilda holds a Master Science in Real Estate Investment and Finance with the distinction from Heriot-Watt University, Scotland, United Kingdom. She also holds a BCom Finance Honours degree from Strathmore University. She is a professional member of Royal Institution of Chartered Surveyors, that is RICS, and Chartered Institute for Securities and Investments, and the Institute of Certified Investment and Financial Analysts. So karibu sana Hilda, we are very, very glad to have you on board. We also have today with us Shafana Rajani. She's a business professional with over 18 years in executive business management and leadership. I'll tell you for free, she's quite vast in the real estate industry, having worked in the industry in various capacities. Shafana is currently the executive director at Laser Property Services, and she is in charge of general business development and real estate management. Prior to joining Laser, Shafana served as a general manager at Palm Golden Properties. She has a Master's of Arts in International Relations, Bachelor of Science degree in International Business Administration from USIU, and holds a diploma in real estate from International Career Institute, USA. That is over and above various vocational certificates. Shafana is a member of the Marketing Society of Kenya, Kenya Professional Realtors Association, Institute of Surveyors of Kenya, ISK, and she's also a registered real estate agent by the Estate Agents Registration Board. Karibu sana, Shafana. Welcome. And last but not least, we have Timothy Wamboi. Timothy is currently the Group Investment Manager at County Pension Fund. Timothy comes on board with 18 years experience in managing investments of high net worth individuals and pension funds, from operations, dealing, research, and portfolio management in asset management firms. Timothy holds a BCom Finance from Kenyatta University. He is a certified portfolio manager by New York Institute of Finance. He's a certified wealth manager by Chartered Institute of Securities and Investments, level 3. He's a certified fixed income analyst by Euromoney Institute. He has a certificate in entrepreneurship for emerging markets by Harvard University, and is also a member of Institute of Chartered Investment and Financial Analysts, CIFA. Timothy is a certified trustee by RBA in conjunction with Humber University of Canada, and has worked as a senior portfolio manager at Corp Trust Investment Services for 10 years, and he has also headed NatBank Trustee and Investment Services for 6 years. Karibu sana, Timothy. Thank you. So to start us off, I'll want there to be a poll just for us to establish how many of us have heard of REITs. Do we understand what REITs are? What is our expectation? Just to gauge the expectation of today. So maybe I'll ask Ken Morema, throw up the poll and let's have people respond just to gauge how much do we know about real estate investment trusts. Marema, are we on?
Just a minute. I'm gonna page 41.
Mambura? Okay. As we wait for the poll to come in, no harm, we can have, I want to invite our first panelist, Madam Shafana Rajani, who will take us through the first session, which is introduction to this session. She'll tell us what REITs are, and she'll tell us how we've come this journey from our traditional investments up to where we are in the real estate sector. Shafana, the stage is yours. Karibu.
Thank you, Esther, for the very warm introduction. And good morning, everybody. We are so happy to see you here today. Welcome to this webinar. The objective of the webinar is to walk you through what REITs are. So I will begin by just providing the background to how REITs came about. We heard the first iREIT was introduced into the market in 2015. So just before I delve into that, some of you might ask, okay, so we know REIT is something that's managed by the CMA. So why is then a property management company involved in promoting REITs? So without further ado, just to give you an understanding, as Laser, what we do, and it's not to promote Laser, so I will not dwell on this screen too much, but just to give you an introduction of what we offer and what we bring on the table to the REITs. is we do property and asset valuation. So you will see in future slides that for a REIT, you need to typically have a valuer on board. So we do offer valuation services. We do provide investment and feasibility consultancy services. We do project management and maintenance services as well. We do real estate agency. This is extremely important in terms of REIT management because we need to increase the occupancy of those specific buildings. And lastly, we have, okay, so I can see the untitled poll is up. So Esther, do you want us to run this and then I can continue
Yes.
the presentation?
I think so. I think it would be useful. I think
Yeah.
it would be useful. It would be useful. Maybe we can just have people take the poll. It's very 2 questions or so, and we are good to go.
Okay, so everybody, let's take a few minutes and just take, not even a few minutes, just a few seconds and participate in this poll. So have you heard have you heard about REITs? So it's either a yes or no, and then we have a follow-on question to that.
Mhm. I think we are good on that. Maybe we can move on to the next question. Morema, do we have the next question on board? It's well. Maybe Shafana, you can continue. We'll take the poll at the very end. No harm.
Sure, no problem. Thanks. So like I said, real estate agency, and lastly, we have property and facilities management, which is also very crucial to efficient REIT management. So to delve into that is typically who should consider REITs investment. And for this, it's important we understand the background of REITs. I mean, as Kenyans and generally as human beings, we all aspire to own real estate at some point in our life. But sometimes our personal circumstances, our budgetary restrictions does not allow us to be able to do this. So some very creative person, this is, I think, all credits to CMA, at that point say, why don't we come together? If I cannot afford a property on my own, why don't we come together collectively and invest in a property? But of course, this would need to be regulated. This would be need to be professionally managed. So typically what CMA then did is came up with the whole REITs framework, the regulations. There is actually regulations which Timothy and Hilda will speak about. So I do not want to steal their thunder on that. But then they came up with the guidelines on how REITs will be managed and how REITs will work. So through this, automatically, we are able to become an investor for return purposes without the headache of construction and sourcing for capital. Because we know if we were to go in and look for real estate investment, the first thing you would need to do is if you're building for yourself, you would need to deal with the headache of construction. You would need to source capital for this. And individually, it's quite difficult to do this. So what we say, like your typical Chama and SACCO arrangement, a group of people can come together and then holistically invest in real estate to be able to benefit as a landlord or as a homeowner. So the second element, automatically becoming a landlord for return purposes without the headache of managing tenants and maintenance. For those of us who are landlords, you know that this is quite a bit of a headache, and it's not understated, it is a headache. So what we do is then as your REIT manager, as your property managers, we come in and actually take over that headache for you, but without taking away from you the return for that specific investment. So I am actually leading towards when you see either you're becoming a real estate investor or you're becoming a landlord, I'm actually leading into the 2 kinds of REITs that CMA came up with. One is IREIT and one is DREIT. And Hilda will be speaking a little bit more about that. But this is typically the history of REITs. Just to delve into parties involved in a REIT, and again, I'm setting the stage for further discussion, is the promoter has the skin in the game, and then you create a trust. Now, a trust deed is created. So trust deed is like our contractual agreement. If myself, Esther, Timothy, and Hilda came together, and say the four of us want to invest in property, the first thing we would do is come up with an agreement of this sort of partnership. So the trust is typically just a basis of that partnership. How much will Shafana earn? How much will Esther earn from it? How much will Timothy earn from it? How much will Hilda earn for it? So this then guides on the income that comes in. And this is typically managed by trustees. I believe there are currently 3 trustees. Hilda will confirm that. Registered trustees currently in Kenya. And they will then appoint a REIT manager. So it's actually the trustees who then appoints the REIT manager. As of now, I believe there are about 10 REIT managers that are registered. They could have grown. This is my statistics as of the end of 2021. So Hilda will take us through that. And then the REIT manager would come in and appoint a valuer, a structural engineer, an auditor, a property manager, and a project manager certifier. So the valuer, like I mentioned, this is probably where Laser would come in. Structural engineering, we have our own team, so we would be able to come in here. Auditors, we have quite a few registered auditors out there in the market, so an auditor would be appointed. This is just to keep an independent oversight on the financials of the REIT. And then you have a property manager. So typically, who will manage the day-to-day operations of the property? This is where the property manager will come in. And project management certifier, this is more the person who will be involved in a D-REIT position. Because in a D-REIT, you need to be able to have a project manager who is looking after the interests of the REIT. So the promoter, if you can see in the blue, is independent, but he still, and he or she, for gender sensitivity, remains as part of the trust and has skin in the game. So these are typically the parties involved in a REIT. And then you have the subscribers, which is typically the people who buy into the REIT. So lastly, and in consideration of time, so that the panelists can then build on, is typically why would anybody want to invest in real estate out there? So all of us, like I said, aspire to own real estate at some point, either as a landlord or either for the sake of just buying and then flipping the property. So for a property manager, we need to make sure that we have consistent and maximized income. Esther did mention that consistent income is one of the selling factors of the REITs. So for us as property managers, we would then come in to ensure that there's efficient collection of rent to ensure maximum return on investment. Again, like I said, maximizing occupancy. This is where the letting team comes in and make sure that the property is well occupied to ensure that we have maximum returns coming in. Management of service providers, because we all know we are currently as a property manager, and even if you're not a property manager, just being out there in the industry, you know that there's a lot of competition between properties. One property will offer you good lifts, high-speed lifts, the other one doesn't have lifts. It becomes a point of decision making. So we need to make sure that as service providers, we maintain the state of the buildings to make sure that our building, which is part of the REIT, has maximum occupancy and best rental income. And lastly, which is very important, there's always the customer, in this case, it's the customer/tenant relationship management, and that is what your property manager typically will provide. The second element that we all look for when we invest in real estate, and it's no different in the REITs, is capital preservation and growth. Because we do intend that if I buy a house today for 25 million, I want to be able to sell it for 27 million, for 29 million in the future. So as a REIT, when they take over a property, there's also that foresight into capital preservation to make sure that the capital, we preserve the value of that capital, which is the real estate value, but we also want to grow it. And this is where getting a professional property manager on board, whether it's a REIT and otherwise, is very important, because efficient maintenance of the property fittings and assets helps us preserve this capital. Cost management, very important, because remember, you're going to be earning dividends from this REIT. And if your property manager is efficient in cost management, is when you will actually be able to yield some profits, which would then come to you as dividends. And I think lastly, property managers need to provide advisory and data to enable efficient decision-making. Because decision-making in a REIT, like I mentioned in the previous slide, It's a holistic consideration, but the data needs to come from somewhere to enable the REIT manager, the trustees, and the promoter make certain decisions. So we come in at that point. And that's about it. Esther, can I pass it on to the next panelist? I think Hilda will be speaking to us.
Yeah, Hilda will be next. Let me take it up from you first. So thank you, Shafana.
Thank you so much.
Wow, thank you. Thank you. You've opened our eyes to quite a bit on what REITs are. I have quite a number of friends who tell me they want to invest in property. Okay, I can see our poll results are out. And have you heard about REITs? And the answer is yes, we have 69%, and no, we have 31%. But I can see the numbers are quite low among the numbers of those that responded. So those who've not heard about REITs, we've just started the session, so there's still a lot to learn. And after this session, we'll share with you these presentations, and we'll be able to help you to appreciate how to make REITs work for you in terms of earning regular passive income. So Shafana was just mentioning that I have quite a number of friends who tell me they want to invest in real estate, but it requires millions and millions and millions of shillings, which they don't have. And from what you've described, it almost sounds like it might be possible for them to invest in real estate without the millions and millions and millions of shillings.
Definitely, definitely. Now real estate is a possibility for anybody.
Great, great. I think it's getting exciting as we go. So at this point, I'll ask the people that our attendees to keep sending in your questions, sending in your comments. Any questions you have for Shafana, please put them on the chat box. If you wish to maybe contribute or say something, raise your hand, although we will take the questions towards the end. So feel engaged, feel at home, keep asking, let's get as much information as we can. So on to our next panelist, that is Madam Hilda. Allow me to just add something about Hilda that is very, very exciting. Okay, before we go to Hilda, let's do one more poll. How much do you know about REITs? A little, a lot, everything, nothing. Maybe we can do this one very quickly in the next a minute, 50 seconds or maybe. Great, great, great. Keep voting, keep voting. We have a good number of us on the call today. Keep voting. How much do you know about REITs? A little, a lot, everything, or nothing? At least I can assure you all our panelists are towards everything. Good. All right, thank you. So we can pull the poll down. We can now pull the poll down so that we move to the next one. So our next speaker is Hilda. Hilda knows quite a lot about REITs. I was just reading her profile and it was exciting to see that one, she was in the first I-REIT that was launched in Kenya. That is the Fahari I-REIT. That tells you she knows even the teething problems that we have faced as we started launching REITs in Kenya. Hilda also serves on the Capital Markets Authority REITs Task Force. Wow. And she's a member of Fund Managers Association and the Secretary of Real Estate Investment Trust Association of Kenya. So Hilda, the people today are looking to you to hear what are those teething problems? How do we what is this REIT? How do we demystify it? And can I participate in it? Hilda, the floor is yours. Karibu.
All right. Wow, what an introduction. Thank you, Esther. And thank you for the opportunity to share about REITs to your audience. I don't know, the host, am I able to share my screen?
Yeah, you should be able to, as they are sorting you out on that.
All right, thank you. I think I can see it.
Good, good. Okay, Hilda, before you start, allow me to just tell you what the mood is like in the group, the team that we have today. So we have, how much do you know about rates? We have 67% no, a little. And then we have 18% no, a lot. We have nobody who knows everything. And then we have nothing at 15%. Remember this nothing, we also had another percentage earlier on, those that know nothing about real estate. So Hilda, the floor is yours.
All right, thank you, Esther. So I will just, Shafana has really touched on a bit on what REITs are. So I guess this slide is just for informational purposes and just to offer a bit more information on what a REIT is. I think one of the most important things to know is that the REIT is a regulated investment vehicle by the Markets Authority. So it's not something that just somebody came up with and is not regulated, or there is no structures or corporate governance that actually guide the way the REIT is actually structured and operated. And then the other thing to note is that the REIT generally is a company structured as a trust. So it owns and operates income producing property, which is real estate. And this could be anything, from offices to retail centers, convenience stores, industrial, which could be logistical parks, warehouses, go downs, rental housing, hospitality, integrated development, mixed use, or even data centers, or even healthcare facilities. So it's quite vast on what a REIT can own, and these are really asset-backed vehicles. What this means in layman's English is that this is an investment that is backed up with an asset. So it means that you're not just investing in something that does not generate any revenue for you or any income for you. It's actually something that is an asset, and we know what just a simple definition of what an asset and liability is. A liability takes away from you, an asset adds to your investment. So ideally, this is an investment that actually adds into your investment portfolio. Then there are no barriers to entry. In terms of owning property, traditionally we've had to have large sums of money to actually own property or acquire land or any sort of property development. But right now, with the REIT, you can actually own a piece of that through this investment vehicle. And then it's also diversified in the sense that within a REIT, you can have different range of properties. Ideally, at the moment, you'll probably find that a lot of people either have one type of property, maybe they have some flat somewhere, maybe they have some go down somewhere, maybe they have a hospital somewhere, but they do not necessarily own all of these types of property within one structure. So a REIT actually helps you to own a variety of properties within one structure and allows you to earn a revenue from it. And I think this slide also just adds on a bit to what Shafana mentioned. So it just sort of adds a bit more color to how a REIT potentially works. And as I mentioned, it's a very regulated investment vehicle, and it's very structured. So you can see those are parties to the REIT. So I'm not going to reiterate this more. I know Shafana had mentioned about it, and we're going to share the slides. So ideally, what this means, you can see the REIT is at the center. And then you can see there's a trustee on this end, and you can see what the trustee does, acts on behalf of the unit holders. You have the REIT manager who offers management services and earns a management fee. And then you have the real estate assets, which are owned by the REIT. And then in turn, they give net property income, net income, rental income to the REIT. You have the property manager who offers property management services into the real estate assets. And then you have and then in turn they earn a property management fee. And then you have the development manager who offers development management services by developing the properties and earns a development management fee. And then eventually the REIT unit holders, which is you, who are you and me, are able to hold units in a REIT, just the same way you own stocks in Safaricom or KCB or Bank, and then you get income distribution through the yearly dividend that's usually distributed. So this again is also just a simple illustration of how a REIT works. So you can see, this is typically very simple. You can see you and me are here on the left side. As the investors, you can see the properties on the right side, and then the REIT is in the middle, and there's some sort of ecosystem happening here. So the REIT is at the center. It owns and acquires this property. These properties in turn give a rental income, and then the REIT actually now distributes to its investors, and in turn investors actually invest in shares into the REIT. So what are the types of REITs that we currently have in Kenya? So typically we have two types of REITs. So I want us to really focus on the equity REITs. Equity just means a unit of ownership. So I think maybe we should change that word. It may seem a bit complicated, but really it is not. And then you have the mortgage REITs. So we currently do not have mortgage REITs at the moment, but I know the KMRC, the Kenya Mortgage Refinancing Company, there's something going on there in terms of issuing mortgages, and could possibly turn into a REIT. But we're watching that space, and I would want us not to focus on that right now because it's not operational in Kenya. Although it's good to know that there are mortgage REITs that actually help you. It basically lends money to owners of real estate who do not have direct ownership of the asset and are able to own own property. So I want us to focus on the three types of REITs that we actually have in Kenya, and this is really on the yellow, this orange part, which are the equity. Equity just means a unit of ownership. So this really just means they own and manage real estate assets simply. And the real estate assets, as I mentioned, is those assets that are within the property market. So you have offices, residential, industrial, etc. And they are focused on specific, either they're focused on specific asset classes or diversified portfolios. What this means is that they either focus on maybe commercial property, maybe you may find it really just has offices, maybe retail and some industrial, so maybe some go downs and warehouses, or it primarily focuses on housing specifically, or it primarily focuses on hospitality or maybe healthcare, etc. So it could be specific to a certain real estate sector, or it could be diversified. And then majority of REITs usually have a core portfolio, meaning they have a portfolio of assets where properties are put together. And then eventually, as the REIT continues, it's able to acquire more properties, just the same way as a company. A company grows. So the same way Safaricom was listed a couple of years ago is not the Safaricom we see today. So ideally, the way Safaricom launched, there was it was a company, it was a well doing company, and then eventually it has grown and grown and grown over the years. So simply the same way a REIT will start with a core portfolio, so it will start with a couple of properties, and then eventually as time goes on, it will continue growing. So it's not something that will remain static. So it's something that will continue growing over the lifetime of the REIT. So ideally, we have three types of REITs which have been approved by the Capital Markets Authority, which is really the authority body, the regulator that regulates this investment vehicle and anything within the capital market space. So we have the income REIT. So income REIT primarily operates income producing assets. So this means that they only invest in properties that are already income generating. What does that mean? Income generating means rental revenue. So it means it will only invest in a property that's already built up and is already generating revenue for the REIT. And then a development REIT will only invest in they invest in what the REIT, that development REIT does, it manages development projects. So these are real estate assets that are still within development. So you'll notice that there will be, the REIT itself will be managing development activities, making sure the properties are being developed as per required, and then eventually they will become income generating assets. Just the same way, you start with the foundation, and then you continue building the floors, and then eventually you start having people entering your property, so then it becomes an income generating property. So ideally, most properties within the development REIT actually become income generating properties because That is the whole aim of actually, having a REIT in the first place, is to ensure that you're generating a pipeline of properties that actually can give income to the income REIT, which in turn now becomes the revenue distribution to the investors at the end of every year. So then the other REIT that has been approved by the CMA is Sharia compliant. We can't forget our friends in the Muslim community, Islamic community, who really really have to be Sharia compliant. So at the moment, we don't have I would say a Sharia compliant REIT at the moment, or rather an Islamic REIT per se. So, but this is still an avenue that is still yet to be explored. And we have to note that a REIT, the REIT regulations, right, the rules and how to operate and to manage a REIT actually came into being in Kenya in 2013. So they are fairly new, and this concept is not new, has been there globally. Actually started in the US in the 1960s. So this is something that has been growing all over the world since then. So it's just that now that we're catching up. And just to give you a bit more context and to just show you that Kenya is still way ahead, the REIT structures actually came into being in the United Kingdom in 2007. So you can imagine that's just how many years back? Maybe 6 years back from Kenya. So we're doing very well, and knowing that that is a very developed country. And then just within Africa, our friends in South Africa, their REIT regulations actually came into play the same time in 2013. So it's just to give you comfort and to understand that this is not a new concept. This is not a Kenyan concept. This is not something that just came up just the other day and has not been there. This is something that we have been seeing globally across the world. And it's something that is now gaining traction in Kenya as more and more REITs coming to market. So what does a REIT invest in? So what does a REIT invest in? So ideally, a REIT can invest in commercial offices, as I mentioned. This includes also service offices, residential, hospitality, retail, data centers, healthcare, industrial, which could be logistical parks, go down and warehouses, integrated development, meaning that development activities, and also a diversified property that has several uses. I'm sure you've seen properties where maybe you have shops at the bottom, and then you have a bit of residential, or you have some shops somewhere, and then you have some offices. So it can invest in properties that are quite diversified. They don't necessarily have to be a certain use per se. And then who can invest in REITs? So who are the REIT investors? So the REIT investors are actually you and me. So these could be, the developers are really the sponsors, because remember, developers are the ones who are developing this property. So basically they are the ones providing those properties. So they actually have to make sure that they're building good quality properties to ensure that they can actually be put into a REIT so that you and me can invest. So you and me is could fall under pension funds, could fall under financial institutions, insurance companies, endowments and foundations. We really don't have much of that in Kenya, but it's good to know. Hedge funds, trust funds as well, unit trusts, and also individuals like you and me. We could, just the same way you have your little stock portfolio somewhere where you have some shares, it's the same way you can go and own shares in a REIT. And also chamas, to your individual chamas, where you bring money together and pool funds. So this is still something that you can invest in as a group, and also SACCOs and also cooperative institutions. So it's something that that is investable by pretty much anybody. If you and me can actually walk in somewhere, and actually the same way you go buy shares is the same way you can buy REIT shares, then really anyone can really invest. And then just to give you a bit of more color, so we have just to show you how REITs are looking in the African continent. So REITs within the sub-Saharan Africa markets, you can see South Africa down at the bottom here has 33 REITs. That's quite large. And then Nigeria has 4 REITs. Kenya has 3 REITs today. And we're seeing a lot more coming up. Ghana has 1, Zambia has 1, Tanzania has 1. So you can see where really Kenya is still still very much quite at the forefront. We're still yet to catch up with countries like South Africa, but we're still doing very well. And you can see it's not a new phenomenon that's within, and most of the countries are picking up. And you can see it's the major economies within the Africa sub-Saharan market, and the economies that are booming, and the economies that have a projected growth trajectory that is very high.
Hilda, allow me to just chip in a little.
Yes.
We missed some of your slides, especially where you are talking about the countries, the different countries. Are you able to just display that slide? It's very interesting information.
Different countries. Can you see my slide now? I'm currently sharing, or maybe just
yes, I can.
You can see?
Yes, I can see your slides.
Yeah, so this is the slide I was talking about. So we moved from the REIT investors. So the next slide is actually on the REIT. The REITs are actually within the sub-Saharan markets. And I was just saying that, can you see?
Yes, now we're good.
All right, and I was just saying that as you can see, the countries that actually have the most REITs or have the REITs structure is really the countries that you can see that have had a high growth trajectory over the years, and the countries that are continually growing. So you can see South Africa has 33 REITs, is the most developed country within Africa. You have Nigeria, Kenya, Ghana, Zambia, and Tanzania. And just to give you a bit more context, you can see South Africa really caters for the southern part of Africa. And then you can see East Africa, Kenya is really leading, Tanzania is closely behind, and then the usual suspects within the West African side of Africa, Ghana and Nigeria. So we're doing quite well, and this is something that we expect to continue seeing growing in our market. I mean, South Africa has 33 REITs, and they launched more or less the same time as we did in 2013. So I think it's something that we can catch up to, and we can continue seeing as we go forward. So what are the REITs that we currently have in Kenya? So currently we have 3 REITs. So specifically, we have the Ilam Fahari I-REIT, and then we have the Akon D-REIT, and then we have the Akon I-REIT. So I will start with the Ilam. So the Ilam came into market. It started in 2015. It was actually listed in November 2015. It was listed on the NSC main board. So just the same way you go buy your Safaricom shares, the same way you can go buy a unit of Fahari. And then the current price, this is a bit, the information is not very current about the price. The price keeps changing up and down. So we'll take the current price with a pinch of salt. That's something that changes daily. So we can overlook that. And the asset types that are currently in the market, not in the market, in the REIT are actually commercial. So this is what I was saying. The REIT does not necessarily have to have one type of asset. The Fahari REIT currently has a retail asset, has an office asset, and also has some industrial assets. So it means you can see it has, that's why it's called a commercial REIT, because it actually has commercial properties, and it has an asset manager. So it's well managed by ICA Lion Asset Management. They have a track record of about 35 years plus in their business of asset management. The AUM is quite big, is almost about 4 billion, and the current return is about 4.8. But we take that as with a pinch of salt. And I say this because as you know, this is the time that the financial institutions are releasing their results for the financial year 2021. So this number changes. So this is something that once the results are released, then we should be able to recalculate that and see what is what the return that we're expecting. And then we have the Akon REIT. So the Akon REIT is twofold. So they have a D-REIT and an I-REIT. So simply put, what Akon did is that they combined the two. So they have some properties which are already income generating. Remember the I always means income. The D means development. So they have properties which are already income generating. So it means that they're already generating revenue for the REIT. And then you have the D-REIT, which is a D-REIT, where properties are still being constructed and are still being developed. And then eventually they'll come into the I-REIT. So that is what it simply means. And this is a fairly new REIT, was listed last year in February. And this was listed still on the NSE platform. And then the current price, again, we take with a pinch of salt. This changes daily. And then specifically, the Acorn REIT is purely residential. Remember at the beginning, I talked about a REIT can either specialize in one asset class, like basically one sector in the property market, or it can diversify and have various different asset classes. So
Hilda,
right now, yes?
Sorry, Hilda, allow me to interject again.
Yes.
I think we seem to have the problem again. I'm
Yes.
getting a number of feedback from the team that they would
Yes.
love to see your slides, but they are not able to see them.
Oh, okay.
It doesn't seem to be moving on all
Okay, let
ends.
me do this. Let me stop sharing and then reshare again.
Yes, that might do us good.
Right, let me do that. It's actually the last slide, so can you see?
Yes, beautiful. I don't know, can we see, maybe we can get the comments on the comment box, chat box? Yes, now they're beginning to see. We are getting the feedback.
Excellent. So, so I was saying that we have 3 REITs currently in the market. So we have the first one, which is the Ilam Fahari REIT. This was listed in November 2015. So it's been quite around for some time, and it's listed on the NSE main board. And then I mentioned that the current price for all of these REITs, I think we just take with a pinch of salt, because this is information that changes daily. And then the key thing to note is that the ILAM is the ILAM REIT is specifically a commercial REIT. So what that means is that it has different types of commercial properties. It currently has a retail asset, has an industrial asset, and it also has an office asset. So it means that this REIT has various properties within the commercial space. And remember what I mentioned earlier about what kind of properties a REIT can own. It can decide to be a diversified REIT, or it can be a REIT that's geared to one specific asset class, as we will see with Acorn REIT. And this Ilam Fahari REIT is managed by the ICA Lion Asset Management, which who have about 35 years plus of experience, which is very good. And that is one thing to note with all of these managers. REIT managers are very experienced people, so it's being managed professionally. So there are no quacks. There are no, they know what they're doing. Currently, and the other thing I want to mention is that the AUM and the return and the dividends per share and the yield, that information, I would say we take it with a pinch of salt. This is they've just released their end of year financial year for 2021. So it means that these numbers are going to change, and they're actually going to change for the better. So I think that this is information that always changes every year with performance. And just the same way we see financial institutions releasing their results, all the REITs that are listed in this country under the CMA have to produce audited financial results at the end of every year, and making sure that they are praising investors on exactly what's been happening. Their accounts are audited. So there's a very rigorous process. So it's not just they buy properties, they get into a REIT, and then they just decide what to give you in terms of dividend revenue. They actually are very highly regulated, and actually about 80% of their income collected. So say, for example, they collect 100 million in terms of rent for the year. They are required by law to distribute at least 80 million of that. So it means that majority of that revenue comes back to you, the investor, who is you and me. So then you have the Acorn D-REIT and I-REIT. And here, the distinction is really just, remember I talked about having I-REIT, D-REIT, and Sharia compliant REIT. So at the moment, we don't have Sharia compliant REIT, but we have the other two, the D-REIT and the I-REIT. So Ilam is the Ilam REIT, Fahari REIT is an I-REIT, income REIT. And then Acorn D-REIT has two, it's a D-REIT and I-REIT. So D just stands for development, and I stands for income. So just to remember, that is income generating properties, which are properties that are already standing, and they already have tenants and they're already getting revenue. And then development REIT are just, D-REIT is really, a REIT that's currently carrying out development activities to develop the properties that eventually come into the I-REIT. So this is a fairly new REIT in the market, performing very well. So it was listed February 2021. That's about a year or so ago. And again, I said the current price changes daily, just the same way we look at current prices for the other stocks, the same way we look at the price for these REITs. And the other thing is that to notice that the asset types within this REIT is specifically residential. And it's being managed by Acorn Management and Investment Management Limited, who have been in the market for over 20 years in terms of experience, and they have a good track record. And also, they have also just released their financial results for the year ending 2021. So that is something that we will update this information with. So this is prior information. So you have to note that every year, this information will continue changing. And this is just to show that this is an ongoing business. So it's not something that's static, that you buy today and then it just stalls. No, there are a lot of activities happening. They are making sure those properties are performing in top shape, and making sure that they don't have any vacancies. They are collecting the rent, and they are being managed very, 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 very well. So that's why every year we should be able to gauge their performance and also make sure that they're distributing to us the revenue that they're required to by under CMA regulations. And I think that brings me to the end of my presentation. So Esther, over to you. I'm happy to take any questions. And just to say that this information may seem a bit daunting at first when you start seeing it, but it's really, really very simple. And even as we continue socializing in these webinars and just exchanging our views and learning from each other, this is a concept that is very good and also should really change the mindset in how we own property in this country. Thank you.
Wow. Thank you, Hilda. Clearly, your CV matches the person. Wow. We've learned quite a lot. Personally, I've learned quite a lot. I'm in the industry. I know a little bit about rates, but from what you've presented, you've opened my eyes to so much more. And interestingly, I've noticed that the D rate seems to be making a lot more money compared to the I rates. Or was that a typo, Hilda?
No, it's not a typo. Development REITs, as much as they make a higher return, is the same way they can also just flop. And you can get your fingers burned. So ideally, the way the REIT is structured is to ensure that you're giving investors a de-risked investment product, meaning that you've already taken up, almost all the risk from the investor. So when you have an operating property, what is the risk? You already have a standing asset, you already have tenants, you already have revenue you're getting from income, the rental income. So ideally, you don't have any risk per se. Your job is just to manage that property and to ensure it is it is performing very well, quality is maintained, etc. But for development, anything can go wrong. Right now, we're talking about the steel prices going skyrocketing, and they keep going up. So what does that mean? If you're invested, if you have a development property at the moment, you are really have to manage your cash flows, and you're really rethinking your whole strategy, because the costs are really high and you cannot develop without without those cost inputs. So what Acorn have done is that instead of offering the investors, instead of having the investors take all the risk when it comes to development, they're de-risking. So if something was to go wrong, the investors, the risk is really very minimal. So what they've done is they've tried to also give a combination of the two. So you'll notice with the D-REIT, with the Acorn REIT, for 100%, ideally, if you buy, say, 100%, say you buy 100 shares, just for example, 30 shares will go to the D-REIT and then 70 will go to the I-REIT. So what that means is that you get, as an investor, you get to enjoy the upside of the 30% in the D-REIT, and that's and then the 70% you get to enjoy the stable returns of an I-REIT. They're stable, they're predictable, there are no surprises, so it's quite a good mix, and to just make sure that the return is quite good for the investors who are you and me.
Wow, thank you, Hilda. I think the secret is in the balancing. I like that. Good, great. I think time has far much gone. We didn't realize you just carried us away, Hilda. We were all excited.
I'm so sorry.
No, it's not your fault. I think we were all excited here. I can see Esther Nyambura here is equally excited and saying, thank you, Hilda. I've learned a lot. Thank you, Esther. Without further ado, allow me to call on board Timothy so that we'll have adequate time at the end for the question and answers. We have some questions and answers which we would want you, Hilda, to address, and Shafana and Timothy. But before we do that, I want to hear from Timothy. And maybe, Timothy, you can tell us from an investment manager's perspective, what are the operational challenges in optimizing the returns from REITs? And what role do they play in a balanced investment portfolio? And any other information you feel we may need to know on this table, maybe just from Shafana and Hilda's presentation. Timothy, the floor is yours.
Thank you, Esther. Am I audible enough?
Yes, sir, you are.
Thank you. I want to welcome everybody who has joined in for this webinar. And I've realized most of the attendees today, they know a little bit about REITs, which is good. So I think I'll begin by addressing those who know nothing, about 6%. And then perhaps the best way to capture what a REIT is, when I think about it, is when you drive along two rivers, yeah, you look at that huge investment and you ask yourself, I wish I could own two rivers. Yeah, I wish I had enough money to own this kind of a project. Yeah, but you look at your pocket and you're like, okay, maybe in this life God didn't intend me to. Now REITs came in to cure that, so that if the owners of two rivers could package that into small units, I think it's worth about 4 billion shillings. If they could break it down into small units of, let's say, 20 shillings, that's about 4 million units. Then with your 20 shillings, you could own a bit of two rivers. Yeah. So that if the owners of two rivers are told to stand up, you'll stand and say you own a piece of. Yeah. And basically, in a nutshell, that is what REITs are. They allow individuals to own real estate, which previously they couldn't. It would be not be within their reach. At the same time, you could be having this. You could be an investor. You have a great idea. You know, if you did this kind of a property package this way, people would really earn from that kind of investment. But you don't have the money. Yeah, you try to go to the bank with your beautiful idea. Nobody's listening to you. Okay, like I believe the individuals behind the Econ IREIT, the idea of student accommodation. It was a first in Kenya. Nobody thought about it, but they had that idea, beautiful one. So they thought, instead of going to a bank and looking for the money, and they don't have the money themselves, what do? Yeah, they package those properties in a REIT, and then they offer the units to the public at a very low price, about 20 shillings, 40 shillings. Yeah, you're able to own a piece of that grand idea. So for me, basically in a nutshell, REITs allow the general public to own a prime piece of real estate, which could have been beyond their reach at the moment. So then you ask yourself, if using the analogy of two rivers, if now the individuals who want to package that REIT that property into a REIT, okay, don't forget that this REIT is open to anybody. Even if you have some few flats in Kawangware and some in Rongai, yeah, you can still package them into a REIT and offer them to this market, and you know, get other people to invest in those particular properties. So to safeguard the investors, because if you're buying, if you're using a 20 shillings, your valuable 20 shillings to buy a piece of that particular building, yeah, are you protected as an investor? So due to that, there's a legal framework that has been advanced by the Capital Markets Authorities of Kenya to guard investors, so that if you put your money, number one, you might put money and then the building collapses. Who has covered you? Yeah. So to cover you in that, the law says there must be a structural engineer who certifies the building on a continuous basis. Yeah. How sure are you the rental collections are what they are? Or somebody is collecting some, putting in their pocket, and then the others, the money is being put in their account. Now to guard that, the law says there must be a REIT manager licensed by the CMA. At the same time, each and every REIT, if you bring your properties, your flats which are in Kayole, Molongo, all over the country, into this particular REIT, yeah, the law says you have to appoint a trustee. Okay, you are no longer in control of those properties. Actually, the title deeds stop reading your name. Yeah, Waihumbu Apartments, they stop reading that name. They start reading the name of the trustee. For example, the most common trustee in the market is a Cooperative Bank. So the parcels of land will start reading Cooperative Bank. I mean, let's say Timothy Reid under the trusteeship of Cooperative Bank. The title deed actually go to the trustee. That is to enhance efficiencies of the entire rate, so that as people invest in that rate, they are well safeguarded. You don't want to put your money there and then, you know, the value of that building, for example, I talked about Two Rivers being worth 4 billion shillings. Ask yourself, this 4 billion shillings is the one which is being divided into units of about 20 shillings each, okay? To come up with the entire value of 4 billion. So you're paying 20 shillings to own a bit of. Now, what if these guys value the property at 6 billion? Okay, so you'll be paying for an overvalued property. Okay, it's like buying a piece of land which is worth 100,000, but somebody is telling you it is worth 200,000. It's the same concept. So to guard against that, there's a legal framework that allows independent valuers to value those properties before they're packaged into the rate. Now, the legal framework surrounding establishment of rates is that there has to be a custodian. These rental collections that normally go to your pocket previously, now they'll be going to the custodian. Okay, and that custodian will be mostly the trustee is always the custodian, because this one is very sensitive. The money, you have to be very careful about how the rental collections are being handled. The rate manager would be overseeing the entire investment. You have to have a legal team. You have to have valuers. You have to have engineers. Again, like I said, all these are legal. Let me say, their requirements by the law, and all this is captured under the REITs regulations, the capital markets REITs regulations, real estate investment trusts of 2013, and to say the least, I think the REITs regulations are the most elaborate of all regulations. If you look at, it's about 300 pages. Yeah, CIS regulations, derivatives regulations, less than 50 pages, but for the REITs, the legal framework is quite robust. I think I've covered well on the legal framework. Like you said, let me talk about some challenges that you will have to overcome as you try to optimize returns when you invest in properties. one of the key regulations for rates is that 80% of all rental collections, I mean, of all, let's say 80% of the profits that the rate has made must be distributed as dividend. Okay, that's huge. Most companies normally retain some money for future development. Yeah, some even just distribute 40% of the dividend of the profit, even 20%. The rest is retained in the company for reinvestment. But for a rate, it's different. You have to give out 80% of the profit, so that you only reinvest at least 20%, okay, at most 20%. That's a challenge because as a company, you may want to optimize returns, but now you're curtailed in terms of the funds that you can reinvest. So even if you want to, can I say, do some more projects, either you issue new units or take a loan from a bank. But that's one of the key critical challenges that faces rates as they try to optimize returns. Again, like I said, due to the reason that you cannot retain more than 20%, then rates may have to borrow for, let's say, expansions, maybe some major innovations, which could result in higher financing costs, of course, which goes to hitting the bottom line and the dividend in the long run. So that's another critical challenge that investors face when investing in the rates. Again, as you chase returns as investors, properties, in a nutshell, a rate, the underlying asset is a property. Okay, so if anything was to happen to the property market in general, it happens to the rates. For example, if like in 2020, when the COVID pandemic struck, and two things happened. One, we were forced to work from home, either due to the pandemic for containing the spread of the infection, or companies closing down entirely, and so they had to vacate the offices. So that basically meant that rental collections declined. So which means if you had the exposure, if you invested in a rate somewhere, your returns are definitely hit by that can I say market volatility, which may again discourage investors in this particular asset class. Again, once the rate is listed in the stock exchange, I can tell you our stock exchange is not very, securities exchange is not very, can I say, lenient to investors. I know the Fahari, sorry, the ILAM rate now can bear witness to that. Yeah, because the book value of all the assets in that rate, if you divide it by the market price, people are valuing it at about 80%, or even 70. I think 70%. That basically means your property is worth 4 billion as per the valuer, but once you list the shares, the units into the stock market, the market says, "Apana, we think this your properties are worth 1 billion." That is exactly what has happened to ILAM, IREIT, and which now, if you're to, can I say, do your reporting, you'll be reporting a loss actually. Yeah, which is not the real case. So that may discourage investors from, let's say, rate issuers from issuing rates, or rather even you can issue them, but listing, some people may be discouraged from listing their rate. Now, remember I told you that anybody can package a rate. Yeah, you take all your plots all over the country and package them into a rate, and then offer that rate into investors. Now, previously, before packaging the properties into a rate, all the money you collect as a landlord is yours. Okay, pesa yote ni yako. But now, once you go into a REIT, you have to appoint a custodian, you have to appoint trustees, you have to appoint REIT managers, you have to appoint property managers, you have to appoint valuers on standby, you have to appoint engineers on standby, you have to have a legal team on standby. Yeah. All those people are not doing that for free. They have to be paid. Yeah. So the money you are collecting previously, all of it on your own, now some of it goes to pay those service providers. Of course, one of the key deliverables for these service providers is to make sure that efficiencies are increased in your properties. And the bottom line at the end of the day, your return has to, the money that you used to earn before the rate and after the rate, it must be reflected that your returns have increased as the owner of those properties. Then other challenges include transferring of land. Like I said, the land has to move from your name, from Timothy Wamboi's name to the trustee's name. Let's say Cooperative Bank trustee's name. Transferring land in Kenya is quite a challenge, and actually it's a game changer. I mean, somebody can see all that struggle and decide to do away with the rates. So I think in the interest of time, those are the kind of challenges that we go through as you try to come into the rates market. Now, my timer is saying my time is up, but let me finish on this. Let me finish on your last question on the role that plays in a portfolio, especially given that my profession is portfolio management. I think rates provide a very unique solution to as compared to stocks, due to the fact that they have to issue at least 80% of the profits as dividends. That makes sure that that portfolio will have regular income. Okay, the portfolio will have a regular income, as opposed to a stock, whereby, for example, people like Centum, I think over the last 15 years, they've issued dividends only three or four times over the last 15 years. Yeah, they tell you take advantage of the capital gains, but in terms of dividends, you don't get any. So, but if you're in a rate, as by virtue of the law saying that 80% has to be distributed, so if you want some regular income in your portfolio, that's how you ensure that by investing in a rate. It gives you the features of a treasury bond, yeah, in terms of regular income, at the same time the capital gains of a stock, because most of them are listed at the stock exchange. So the capital gains of a stock. At the same time, properties have been proven of a long time to be a bit stable in terms of fluctuations in price. Even as the stock market was being hit, even as the treasury bonds were being hit, property markets over the last, let's say, 20 years have been overall growing. Okay, the growth has been on an upward trend compared to a stable upward trend as compared to the stock market, which has been up and down, yeah, thereby giving investors nightmares. You wake up one day, Safaricom is at 14 shillings, the following later is at 2 shillings, now it's at about 30 shillings. So those kind of risky, can I say, fluctuations don't apply to property markets. So if you want to mitigate against such fluctuations, it is good to have some bit of exposure of rates in your portfolio. Yeah. So basically, to wind it up, whether you're an income seeking investor or a growth seeking investor, the rate exposure is critical to be in your portfolio. So Esther, I think I want to wind it up there and then hand it over back to you. Thank you so much.
Thank you. Thank you so much, Timothy. It's just unfortunate it's a virtual one. We are not able to clap, but I wish we could be able to clap just to say thank you. You've made it very, very simple. I love the analogy you've taken for owning two rivers. There you got my attention. I thought if I can own a piece of two rivers, I would want to. So I think that's good. Thank you so much for your insights. I can see many questions streaming in. Some of them on DM, some of them on the chat, some of them on the Q&A platform. I will only answer a few, and then the rest we will send you an email once our panelists are able to address them properly. Then we can send an email and answer all those questions. I can see a question here from Boru. I can see from John Boru. I think John Boru, I have had your question answered by Timothy, but we will also send you a detailed write-up on the same thereafter. Dennis Gitari. Dennis has written and is asking, why are the most rates return in Kenya relatively low compared to other assets, e.g. bonds or even T-bills? I think this one, can I throw it to you, Hilda? Why are the most rates returns in Kenya relatively low compared to other assets like bonds or T-bills?
Thank you, Esther. That's a very good question. I would have thrown it to Timothy. He's been in this industry for way longer than I have been, but I will answer the question.
Actually, yeah.
I will answer the question. So just a bit of context. So if I invest in property, I buy the land, I start construction, I go through the construction activities, I get tenants, and then my asset is operating, assuming these are, say, like flats. How long does that take? That generally takes like what? Maybe at the very least, maybe 4 years or so, 3 to 4 years. For it to actually stabilize and say, okay, from start to finish, generally this is the time I took. And this is just being, I'm taking into account, I'm not talking about the people who will do it in 2 years or 1 year or 1.5 years. I'm just saying on average, it's likely to take you around that time, right? So when I put in, say, 100 million on, the first year, do I get a return at the end of the year 4? No. That's the day I start earning rental revenue. And ideally, by the time I break even, some years will have passed. So we need to stop looking at real estate as a short-term investment vehicle. If I want a short-term investment vehicle, I will go to something else. So I will go to maybe bonds, I'll go to T-bills, I'll even trade FX, things like that, because it means I'm looking for short-term returns. But the real estate game is a long-term game. And remember, the underlying asset is for a REIT is property. So you don't start today and then you expect in 3 months that I should have gotten 10%. No, it doesn't work like that. And even if you're to own your own property and you start from your 50 by 100 plot, you will still not get your returns within 3 months. So why would you expect that an investment vehicle that is highly regulated within 3 months that you should have gotten your 10%, 15% return? It's not possible. And if you notice, one of the richest people in the world, not even in the country, in the world globally, if you look at their portfolios, these are people with solid real estate backed investments. So that's to tell you it's a long-term game. It's not a game where you start today and expect in 1 year I should have gotten XYZ. No, you shouldn't. So it's a long-term game, and you have to look at it as a medium to long-term investment. So medium, I give it maybe 5 years, five and above years. So if you're looking at it within the 1 year, 1, 2, 3. This is not the investment class for you. And that is why we have different investment classes. So you're not restricted to invest in any of them, but you have to also diversify your portfolio. Yes, I put some money in bonds, or yes, I put some money in bills. I put some money in maybe FX or crypto or anything else, or equities, shares, etc., right? But then when I put my money in property, I am not expecting that these all investments will give me a return on the same day. Right? I'm investing in them for various different reasons. Maybe I'm saying I'll put my money in money market because this is my car emergency fund. If anything goes wrong, I need to be able to pull some cash. if I'm looking for a long-term investment, I'll say, okay, let me put my money in REITs. So that means I will start seeing some good returns as we continue to move along. So which means I'm also securing my long-term investment plans. So you have to look at it that way, because if you look at it, vis-a-vis short-term securities, it means that you're not comparing like for like. So an apple and an orange and a banana, all the same, all fruits, right? But they're all different. So I don't know, a banana, if I touch it after a while, the banana peel starts to look funny, and then after a while it'll go bad very quickly, right? An orange, I can stretch it a bit. If we put it in the fridge, it can stay a bit longer, right? An apple, the same. So, and a passion fruit, even better, it may take a while, especially if I make sure that, make sure the shell is still hard, and, with time, I may eat it a little, it will take a little longer. So they're all the same, but they all have different shelf lives. So it's the same with these investment classes. They're all here to make sure to give you avenues into diversifying your portfolio so that you don't have your eggs in one basket. And also you're able to match your short-term needs to your long-term gains. So right now, say I'm 20 years old. I'd like to live until I am 70 plus 80, 90, right? So what I start doing today, I don't expect to reap when I am 22, okay? This is something I am planning the long term. So it's a long-term game, and we need to realize that and stop looking at it as a short-term investment, because if we do that, we're not comparing like for like. And in looking forward, REIT investments in property have actually proven to be a good and the best hedge against inflation, which means these investments continue appreciating and retaining their value over time, and they're asset backed, meaning unless the asset miraculously disappears off the face of the earth, then it's actually backed. Today, the Safaricom share can be, I don't know, let's just say 20 shillings. Tomorrow, I don't know, something happens, it's 1 shilling. Then what happens? What happens to your investment? It goes, right? But at the same time, I may have 20 shillings. I may put my money in a share, I'd say 20 shillings, and then maybe after some time, maybe 2-3 months, something interesting happens. It's like 30 shillings, right? I gain a bit, right? And then again, it reverts back to 25. So, you're constantly changing. It's constantly changing. You're constantly watching. You're constantly making sure that, you're playing on the upper end and making sure that your upside is protected. So it's also volatile, and real estate investments have proven to be very steady investments over time. So they don't have this a really huge up and downs. Yes, there are cycles. There are times the market is down. I mean, just with any investment. But if you look at the cycles of the real estate cycle compared to the cycles of these other investment classes, not to say that they are bad. I mean, I'm invested also in other asset classes, but my view is very holistic, and I know what investment class is for what. So when I invest in real estate, I'm looking at returns, but I'm also looking at my time horizon. If I invest today and expect to have a time horizon of 1 month, there's nothing I'm going to get. I might as well just put my money in a money market and something else and just, trade it a few days here and there and then move along. But if I want to create long-lasting wealth that's multiplying and appreciating and stable and predictable, then I will also make sure that I'm investing part of my investments into a stable asset class that can stand the test of time, can be a good hedge against inflation, and can protect my long end over a period of time. Yeah, I hope I've answered that question.
Wonderfully, you have done it. You have given it justice. The answer actually just answers it all. I think I'll just tell Dennis, we might need to meet in the patient's corner, me and you, who like short-term gains. Let's meet at the patient's corner. Thank you so much, Hilda. Thank you so much, Timothy. I have so many interesting questions streaming in, and I'm short of time. I'm wondering what to do. Maybe we can just touch one more, Hilda, that has come through my inbox, and then the rest I'll request Madam Shafana, Hilda, and Timothy. I'll reach out to you on the side, and then we will do an email where we can respond to all this. There are quite a number, but allow me to ask this one, Hilda. There's a question coming into the inbox. Can foreign investors buy REITs in Kenya? And can Kenyans buy REITs outside? For example, the UK started before us, and maybe I'm not as impressed with our 4.8%. Can I buy the UK one? Is it allowed?
Yes, it is. So I will start with that's a very good question. I'll start with the Kenyan one. So yes, foreign investors can invest in REITs. Remember, REITs is not any special to the shares that you see listed, the stocks that you see listed on the Nairobi Securities Exchange. They are not any special. The only difference is that those are different companies in different subsectors of the economy. So you have your telecoms, your agricultural, your banking, your ICT. I mean, there's so many of them, right? Your financial services. So REIT is one of them, right? It is just that we did not have REITs before. Okay, so it just means that the same way foreign investors invest in our Nairobi Securities Exchange listed stocks is the same way you can invest in REITs. It's there, it's listed, right? So you just simply, it's the same way. So there's no magic, there's no different requirements. It's absolutely the same. The only thing is that because we've not had REITs in the market, and currently we only have 3, I guess, there are very many questions as to how to invest or if I can invest, if at all, but it's really just the same. So yes, foreign investors can. And then to answer the question about investing in other markets, we are not limited. We can invest anywhere we want. But you have to remember that your jurisdictions are different. Your currency is also different. And even your avenues of investing could be different. So the same way you'd invest in offshore investments where generally, and wearing my fund manager's hat, is to say that usually going directly can be a bit tricky, has a bit of regulations to it, especially when you're accessing another market outside your jurisdiction as a foreigner, and doesn't mean that you cannot invest. The same way we have our own regulations when a foreigner is investing, even the same way they come and live in our country, or the same way we go live in their country, it doesn't mean that we can't live there. We can live there, but, maybe I have to get a permit to do this, or maybe I have to get a permanent residency, etc. I may not get a passport, but I can stay in that country. So it's just to look at it in that way and say, okay, fine. If I want to invest in the UK market, they are also, of course, they'll have to check you. Okay, you're not a UK citizen. Okay, where are you investing from? Blah, 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 and get you all your details. And then now you can be, depending on your solid information, then you can invest in that market. But what I always advise is that the developed world or markets outside our, we are basically emerging markets. So we are emerging, meaning we are sprouting, we're germinating, right? But there are markets that have developed. So they've developed to an extent where they have mutual funds. So the same way we have money market funds, they have grown to an extent where they have such funds. So for specific things, so maybe for technology, for banking, for property, for REITs in fact. So there are so many of these funds. So it's actually better to get into that. The same, because it's easier. And it also, you're in a pooled investment space. If you go directly, number one, the same way you have to get a stockbroker is the same way you go get a stockbroker on the other side of the continent. But now if I invest in money market, do I have to know who is trading those things? I don't have to know. All I need to know is my fund manager, and I have invested there. I want my money removed. I want to put more, blah, blah, blah. But, and so the same concept applies. So I always advise that's the best way to invest. It hedges you against a lot of risks. But it doesn't hedge you against currency risk, because of course, most of these funds are obviously in the currency domiciled in a specific country. So obviously you'll have to take that hit. But investing directly has its benefits. And depending on which jurisdiction you're operating in and which stocks they will have certain restrictions that you'll only know until you identify which stocks you're investing in. So the best bet is really to invest in funds. Funds are able to diversify. So like right now, if let's say you invested in money market right now, do you know which bonds they've bought? Do you know which bills they've bought? Do you know where they've put the cash? You don't know. Yeah, you trust that the fund manager is operating that fund professionally. So it means that they take care of the day-to-day, right? So you just get your statement every other month. But if you go directly, it means that I have to keep checking. I'm the manager. I'm the one who is there making sure, and maybe I'm a baker, maybe I'm a stay-at-home mom, maybe I'm a QS, maybe I'm in Mujengo, I'm a farmer. So what am I going to be doing all day? Am I going to be somewhere in the shamba with my phone trying to check, what's going on? It's easier and gives you peace of mind to put it in mutual funds. And they have been known to do very well because they also track the indexes. The same way we have the NASI index, the NSE all share index, they track those indexes. So if the index is, it takes a view of all, in layman terms, a view of all the stocks on the, say, for example, the Nairobi Stock Exchange. And even if one stock has gone down, doesn't mean that all of them have gone down. Some have gone up, some have gone down. So collectively, it's probably gone up, or collectively, it's probably gone down, right? So you're hedged in that respect because you're not straining your mind to keep doing the actual professional management and leaving it to professional managers, and you're able to get a report every quarter or every year or every semi-annually, depending on what fund it is. So to answer your question broadly, yes, on both fronts, you can invest. I guess in your own home country is easier, but when you start venturing into other markets, those are some of the things that you have to consider. And my advice would be to seek out fund managers who have mutual funds that allow you to invest, allow foreigners like you and me now in that respect to invest in. Then that way, what I'm really just thinking about is just currency, right? But really the other risks are kind of hedged, and even the headache of the back and forth. And that's also the same thing with REITs. So when you put your properties into a REIT, you're not stressed about the bulb has gone off. I don't know, people didn't collect what is it called, garbage, somebody's not paying rent. You already have professional managers that are already doing that. Somebody's not putting the numbers together, the performance together. You have an investment manager who is doing that. So for you as an investor, all of that is taken care of. And at the end of the day, it makes life easier, and it makes investing in property way much easier and way much more fun, and you can and less hectic. Yeah, thank you.
Wow, thank you. I love the passion with which you talk about rates. You make me want to buy one immediately. Thank you, Hilda. Thank you. I'll allow Shafana, just on behalf of all the panelists, maybe you just give us a 1 minute closing remark towards all this discussion that have taken place. Should we or should we not go rates? Shafana.
Thank you, Esther. Allow me to thank Hilda and Timothy for that amazing insight. Yes, I think even if I've been in the industry for as long as I have, we're always learning every day. So thank you for that. Yes, definitely REITs is something we should consider in investing. Like we said, we all aspire at some point to be owners of real estate, even if it's two rivers like Timothy mentioned, that when we are asked, do we own any real estate? We can proudly say that, yes, we own real estate, if not directly through title deed, but at least as a unit holder, you are vested in the real estate industry. So it's very important. And I think like any other investment, I always recommend that you give it due consideration, get into the details, compare it. Sometimes emotions do take the better of us. And like any other industry, there are times when, like right now, the treasury bonds are yielding very high. So that may look like a better opportunity of investment than the REIT. But all instruments always go up and down. So just keep your ears on the ground, keep your eyes on the ball, keep evaluating. I think Hilda said you just need to monitor the performance of any asset you invest in. Be it real estate, be it REITs specifically, be it unit bonds in any bonds that are available. But REITs is definitely one that everybody should look out to. And if there's an opportunity to invest in it, you should go for it, because real estate, there's a very strong clause that says they aren't making any more of land. Everything else, there's always more of, but REITs just gives you that one opportunity to be able to be part of the game, put skin in the game in real estate. And just finally, I want to thank all the attendees for listening to us. as panelists and for attending for today's session. Thank you. And we will be holding more such sessions. Thank you very much.
Thank you, Shafana. Thank you, Hilda. Thank you, Timothy. Shafana, clearly we need a lot more time. We don't seem to have exhausted the wealth of information in Timothy and Hilda and yourself. So we probably need another session and another one just to keep looking at it and, you know, discussing it further. So I see more questions coming in. As I said, we may not be able to answer all of them due to time. Mercy Chepkonga, I see your question, will respond to you. Brenda Kisorio, I see your questions, will respond to you. Naomi, Joseph, and all those who are bringing in, sending through your questions and your comments. We see them and we'll definitely respond. Because of time, I wouldn't want to keep us too long. So at this juncture, I want to call upon Amina Hassan, just to give us a vote of thanks, and then we will be good to go for the day. Amina.
Thank you, Esther. Good morning, everyone. My name is Amina Hassan from Laser Property Services Agency Department. I'd like to thank our panelists today for taking us through the complex topic of REITs. You've made it as simple as possible for any layman to be able to understand. We look out to get more insights from you. We'll be organizing more of these sessions. And I would like to suggest maybe you do another session where you'll be able to crack the numbers so that some people can be interested. You know, when you see the numbers, you'll be a bit encouraged to take part in the REITs. So thank you so much for taking us through the event today. We look forward to more of this. And thank you to our participants for giving us an ear. And let's enjoy our day today. Back to you, Esther.
Thank you, Amina. Thank you, Amina. And because we started off with a word of prayer, I don't know whether Christine Odhiambo is on the call. I would like to call upon Christine to give us a word of prayer. So I can see Christine is here. So once again, Hilda, thank you so very much for giving us time. I know you had a hectic morning this morning, and yet you made time for us. Asante. Shafana, despite your busy schedule, you've made time for us. We truly, truly appreciate. Timothy, I understand you two had an early meeting together with Shafana, and here we are. We've learned a lot from you. It's not to waste. You've shared knowledge with us. Thank you all. So Christine, over to you. And with that, after the prayer, we will be allowed to leave at pleasure. Christine Odhiambo, over to you.
Thank you, Esther. Thank you, our panelists. Let us believe and pray. Heavenly Father, we thank you for the session that we have just had. We pray that, Lord, you will give us wisdom even as we consider investing in REITs. And we pray that, Lord, you will guide us through the events of the day because we have believed, trusted in Jesus' mighty name. Amen.
Amen. Thank you all, and do have a lovely, successful day ahead. Looking forward to seeing you in the next webinar. Asante. Bye-bye.
Thank you.
Thank you. Have a good day.